All right. Hey, everyone. Mark here, Mark Pre-Markets. Thanks for joining me for another Bitcoin video analysis. This is for, if you're just joining me, I'm just going to let you know how this works really quick. By the way, I'm multi-streaming or multicasting on TradingView as well. So that means I have to follow house rules. Now, if you're new to the stream, what I'm going to do first is I'm going to run through the economic calendar real quick. I'm actually going to change that format a little bit and just go straight to the things that are important and not waste any time with that. Secondly, I'm going to go into my Bitcoin analysis, all right, and then I'm going to talk about that, and then I will get to your questions. So if you have a question about a stock or an altcoin, you can put it in the chat now. I see you have quite a few questions in there. Also, TradingView people, now would be a good time. I know it takes them a little time to get things going. All right, so that's pretty much how this thing works. Also, if you want to share what city or what country you're from, that's always a fun fact. Now, my goal again here today is to get this done within 1 hour. All right, that's my goal here. So I'm going to try to go for an hour. All right, so let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, not like they're going to help you any better. Let me get into let me turn this thing off here, the card. All right, and here we are. So you should be able to see me. Hi, everyone. All right, cool. So first thing I want to do is we're going to go over the economic calendar, okay? All right, cool. Hey, Stian. All right, let me just say hello to a few people. We got Dan. Good to see you, Dan. Ben. All right, Alex. Cool. All my regulars. Kai. All right. Savi from Brooklyn. What's up, Savi? I know you don't talk like that, but whenever I see Sabi from Brooklyn, that's what I think of. I'm sorry. All right, let's get into this. First things first, economic calendar, because today is Monday, right? Now, the economic calendar, like I said, I usually read all the items, and most of them are useless. So I'm only going to read the ones that matter, okay? Now, again, TradingView has its own economic calendar. I suggest you use that one. I'm using one that's off screen. So it just gets to the point right away and stuff like that. Okay, it doesn't matter which one you use. When I look at the economic calendar, the whole point is I'm looking for events that are potentially dramatic, okay, or that can cause a range expansion. I'm not looking to trade these events. I'm looking to use them to be aware so that I can manage risk. All right, so I'm just going through, let's see, the 12th. I don't see anything. Okay, here we go. So tomorrow is the 12th, all right? We have for the US Consumer Price Index, that's the CPI, Consumer Price Index. That is an inflationary number. So if there are any surprises there, it can cause something. You'll see that action in the S&P, possibly the dollar, right? The bonds. That's usually where you see the greatest reactions to those. So just something to keep an eye on there. Also on the 12th, we have Royal Bank of New Zealand interest rate decision. Now, whenever there are interest rate decisions, I mean, I don't care what bank it is, that's something that you should be aware of, especially if you're into some Forex pairs. All right, so obviously the New Zealand dollar. Now on the 13th, we have Bank of Japan Governor Kuroda's speech. All right, don't worry about that one. I should not have even mentioned that. All right, now on the 13th, we also have Bank of Canada. They have their interest rate decision, okay? So again, something to keep an eye on if you're in any pair that's crossed with the Canadian. And usually it's not a major global market mover, but again, you need to be aware of. Now, we have also on the 14th, which is what is that, Thursday, I believe? Yeah. Right? That's Thursday. We have the ECB monetary policy decision statement, and they have their interest rate decision. That's important, okay? Because if they get overly hawkish, if there are any surprises in there, right, you'll see some strength in the euro, and obviously that's going to be rising rates all over the world. Okay, so something to keep an eye on there. It could definitely move the euro, and it can affect the S&P. All right, which means it affects stocks, U.S. stocks, even though it's the ECB, because again, that's money. All right, that's money, and if it costs more money to borrow that money, That means there's going to be less of it going around, right? Just like the problem we have here with the U.S. We'll talk more about that in a moment. But anyway, so that's an important one to watch for. On the 14th, we have retail sales for the U.S. All right, I'm not going to talk about that. That's not important. Okay, on the 14th, the ECB press conference, and that's pretty much it. Okay, so that's the calendar. So we have a couple of interest rate decisions. The most notable one is the ECB, and you want to keep an eye on that, especially if you're in any Forex pairs. Okay, again, what you're looking for is potential range expansion. You want to be able to manage risk. So if you're in a position, perhaps you have to tighten a stop. Maybe you should get out of something, that kind of thing. All right, let's move along now to the Bitcoin analysis. By the way, I wrote my article on TradingView yesterday. Where are my TradingView people? I don't see any questions. I only see Steen in there. Come on, TradingView. Takes me a lot of time to get this thing going here on TradingView. I have to yell at the TradingView people. All right. So yeah, I wrote my article yesterday. So if you have not read the TradingView article, you should read those. I publish them every Sunday, and I'm basically people always want me to call trades, and people want me to lie to them all the time. Okay, that's what they want, but that's not what I write about. My articles are basically focused around a perspective, and the title of that article was "Prepare for the Bear." All right, I thought I was very clever with that one myself, and 35K is what I meant by that. All right, and I put that in the title as well. As we can see, Bitcoin is taking a little hammering. It's getting a little hammered right now. So let's talk about that. And again, you have to understand something. When it comes to market timing here, let me just expand this here. My mouse is acting a little funny. When it comes to market timing, the first thing people want to do, right? It's human intuition, is to try to figure out where the next move is. Okay, so we're at 0.0 and we're looking for the next move. But that's not a very good way to go about it because the market is so random. It's not practical. Okay, so that's why people get confused. That's why people say things like, I thought this, but then the market gave me something something else, right? That's because you're thinking. Our job, the way I like to think of it as a market timer, is to think 2 steps ahead. So you let the market make the first move, and then you are preparing yourself, or you are prepared for the secondary move, right? That is where we can at least measure risk and get a better sense of a probability, or a greater probability of the type of outcome that we're looking for, right? Obviously, we want to make money. So that would be, we're looking for a profitable outcome, right? So you're not going to get that in the next move. You're looking for the following move because that's the reactive move. And that's where usually those moves originate from a level, right? So that's why I always emphasize one of the 6 steps that I always talk about, step 2, levels, because that's probably, of all the steps, that's probably the most important one, because that's our roadmap, and that's where we can anticipate a particular type of behavior. What I mean by behavior is price action. All right, now, so with all that being said, let's talk about this Bitcoin situation. I've been talking about this over and over and over. People that listen to me know what I'm talking about. But this section right here, okay, I've been talking about this for quite some time, is a lower high. Okay, I mean, we can go to the weekly chart here real quick, right? And you'll see what I'm talking about. Right, that section right there is a lower high relative to these other structures, right? We have the high, we have the peak at 69K, and now we have this 48K lower high. This box that I drew here, this rectangle, that's basically a consolidation. It's not a trend. So on this time frame, it's not a trend. That's an important distinction because people right away, they get mixed up on their 30-minute chart. I got to fix this thing again. They get mixed up on their 30-minute chart. Okay, they get mixed up on their 15-minute chart or whatever, their 4-hour chart, and they think that they're looking at a trend, but it's not a trend. It's a consolidation. All right. Now, if you're looking to day trade, then sure, you have some mini trends going on in here. All right, but I'm not talking about day trades like this. You can argue that section right there, sure, that's a minor trend within the consolidation, but that's a day trade magnitude. So if you're taking trades based on that type of move, they have to have very particular expectations, okay? So the point is, I'm looking at the broader moves, the broader structures, because if I'm going to base a swing trade, that's what I have to judge it on. And that's where my expectations come from, the profit targets and how I determine the risk or evaluate the risk, right? So the 40, I talked about this area here. Let me clean up this real quick so you can see what I'm talking about. This area up in here where these lines are, these horizontal lines, this section, okay? I've been talking about that for weeks and weeks and weeks. And I've been saying that it's a resistance area. And people still, no, it's not. It's not a resistance area. It's breaking out. Bitcoin's going to 100K. I hope you're still not following those 100K fake gurus. I still see reports on the 100K Bitcoin. I mean, it's like, are these people that mindless, or are they that desperate for business or something? I don't know. But they're still coming out with that nonsense. The point is that section right there is not a section to be buying, okay? It's a section to either sell, take profits, or go short if you're aggressive like that. I don't short Bitcoin, so that's not a choice for me. But the thing is, I knew not to even think about buying in this area, even when Bitcoin was doing this, and everyone was all excited, okay? And Bitcoin's going to 50K and all that other nonsense. I don't care. I have no interest in buying in a resistance zone. Now we're starting to see the effects of that. Of course, the S&P is selling off as well, right? And this thing follows the S&P, as we know. I've talked about the vulnerable S&P. We have the bond market pushing lows, okay, which rates are rising dramatically. None of these things are surprises. The US dollar broke out. This environment does not support sustainable rallies. So that's where I talk about like the macro fundamentals. You don't have to be an expert at that stuff, but you need to at least understand some basic relationships, and that really begins with the Federal Reserve and the way they control the money supply. If they're not going to support this market, where do you think the money's going to come from to get this thing to go to 100K? Okay. Easy monetary policy, when the Fed has low rates and they're just lending money away like it's nothing. That creates the potential for speculative bubbles, right? Because all that money that's floating around, it needs to go somewhere. So it finds its way into speculative assets like Bitcoin, like garbage altcoins. Have you seen Waves? Have you seen Rune? And have you seen, what was the other big joke? Luna, right? All the lunatics in Luna. That's another clever joke of mine. Have you seen those charts? I mean, I'll pull one up for you real quick. All right, because it's important. It's part of my Bitcoin analysis. So let me show you. Let me show you Luna. Okay, everyone, hey, look at Luna. Oh, Luna's doing its own thing. Should I buy Luna? No, you shouldn't buy Luna at the highs. Why not? It's going to be the next Bitcoin. No, it's not. Okay, so again, people get all mixed up when they see this. They think it's going to continue. Right? Like I said, some of these things, they do their own thing. It's usually a result of some type of hype, perhaps a chat room somewhere. I don't know, but they get the herd going and then everyone jumps in at the top, right? Meanwhile, someone is getting out on that. And basically all these retail traders are making someone else rich. That's basically the purpose of a retail trader, is to make others rich. So understand that, right? When you're consuming your information to feed your illusion of control, understand the agenda behind that information. It's basically to get you to trade, right? Because it helps other people. All right, now, so let's talk about Bitcoin. Like I said, bad area for longs. Now, I see some questions in the chat about possibly, are we in a good location in this and that? No, we're not in a good location. It's for day trades, sure, because you have a minor support in this area right here. But I'm not talking about day trades, right? You have a minor support in this area right there. All right. So you may get a brief bounce, maybe a couple of 100 points or something, right? That's really all you're looking for a day trade. This thing is in a consolidation. So I'm not interested in buying midpoints of a consolidation at all. And not only is it in a consolidation, but it's a lower high consolidation in an environment that doesn't support it. Okay, rising rate environment, bad for Bitcoin, not good. Okay, bad for altcoins, bad for S&P, bad for stocks, especially stocks that have to borrow a lot of money, bad, right? So what that means is The environment supports the idea that this thing is going to test 35K. Now, is that something that I am guaranteeing or I'm thinking in absolutes? No. It may test 35K. I don't know if it will. Like I say, I don't know anything. The market knows everything. The market tells me what to do and what to think. I let it make the first move. I suspect 35K is a decent possibility. That is what I'm preparing for. Okay. If I'm going to take a swing trade, I'm only interested in this area here. Why? It's the range low. So probability at least favors some buying activity. Now, here's where things get tricky. The environment doesn't support a healthy bounce off of 35K. The environment supports a break and a lower low. That is what the environment supports. Okay. So I have to be cognizant of that. So I basically, when I'm trying to gauge my probabilities, I can't come up with like a hard number and say, well, there's an 80% chance of this and 80%. I can't do that. But what I can do is give sort of like a general idea. You know, what are the chances that this thing breaks the 35K or 30K support? I say it's probably slightly greater than 51%. Okay. That's because the environment favors such a break. Is it 60%? I don't know. But I would say it's greater than 51%. It's slightly better than random. So that's what I'm suspecting. I can't trade on that. For one, I'm not shorting anyway. But what I'm looking for, like I said, I want to see buying activity and I want to see confirmation in that 35K area, 32K, 33K, even possibly 38K. Okay, depends on the type of price action we get there. But this is the area where I'm looking for longs in this zone. Okay. Now, when I say I'm looking for longs, I'm interested in a swing trade. So that means it's going to have a certain type of risk, right? We're typically with these swing trades, you're looking at least 3,000 points, at least. Okay, I used a 3,000 point stop over here on this trade. I called the trade over here and I got stopped out. And I was right, it was long. Okay, and I would have at least reached 1 or 2 profit targets if I had not gotten stopped out. My stop was a little tight, but that's where I put it. Okay, so my point is you're looking at least, right? That's a minimum number. So if I have to risk 3,000 points, that means I need to make at least 3,000 points. So another important tip or another important idea about this environment is you need to adjust your expectations. So if I suspect Bitcoin is going to break 35K, then I could be looking for a failed low, right? That's very likely to see where it breaks, basically sucks in everyone short, bangs out all the longs, and then we get a reversal in this area here. If I see that, that's a high probability setup if I see the reversal in that area. So that's one scenario. And I said the other scenario would be just another bounce off that 35K support. What's the low there? Yeah, 34.3. So this 35K area, right? That's the other scenario. That's really all I'm interested in. And what would that look like? It could be a pin bar. It could be like a little mini double bottom type of thing going on in these areas, right? Kind of like something like this, right? Maybe we see another one of these patterns there, and it could be anything, right? But I want to see a reversal type of pattern. You can get a big pin bar, something like that, right? A long tail candle. I would be interested in something like that in those areas. Otherwise, there's nothing to do. I'm not stepping in front of this because have you seen the S&P? Right? This thing has plenty of room to expand lower, and there's no buy signal here. So just because something's at a good location isn't a good enough reason. Now, this situation is ideal for inventory people like investors because you're at a low. All right. But obviously the market is poised to go lower. So again, this is just good for you make your one purchase for the month, or maybe this is your second purchase for the month or whatever your schedule is, and you're getting a lower price, right? But just keep in mind, this thing has plenty of room to give you better prices. So that's pretty much it on Bitcoin. Those are my scenarios, and that's what I want to see. If the market delivers one of those scenarios, then I have something to do. If the market does not deliver one of those, I have nothing to do, right? That's my rules keep me out of trouble. So what if we get like a pin bar right here? Okay, what if we get a pin bar there tomorrow? I'm not interested because it's not the right level. Okay, I'm not interested in anything in this area. It's too random. What if we get like an inside bar? Not interested. I don't care. It's not a place where I want to see a reversal. Just like over here, this sucked in a bunch of people right over here, because, oh, buy signal, high or low, blah, blah, blah. Right. High or low in a market that's not in a trend. So the high or low doesn't really mean anything when the market is not in a trend. It's in a range. So it's going to be more random. Does that make sense? So that's my Bitcoin situation. Now, all of this Bitcoin talk applies to the garbage altcoins because they all follow Bitcoin, right? So if Bitcoin is likely to test a lower support, a lot of these altcoins are going to break, and a lot of people are going to get either margined out of positions. They're going to bang out of stuff because they don't understand what's going on. And I have not been a big fan of buying altcoins at all, because of this situation where highly speculative instruments do not typically perform well in this type of environment. People don't understand the macro situation. If you're like, well, who cares, right? We trade charts. It really would help if you understand how interest rates work and how they affect everything, okay? So anyway, so that's what I have to say about that. Let me just see what's going on here in TradingView. I only see 2 questions on TradingView. What's wrong with you people? Come on, TradingView. I do this. I multicast on TradingView just so I could be on TradingView, and I got like 2 questions. All right, let me get to some questions here. I got questions in my other chat. At least someone's asking me questions. All right, so first we got Ben from Toronto. Hey, Ben. Now, okay, so I just answered that whole question about Bitcoin and the buy location. Yeah, and I described the buy signal. Okay, so another question from Ben. H bar USD. So look, like I said, a lot of these garbage coins are going to be in good locations, right? H bar. Look, does that not look similar to what's going on with Bitcoin? These things, they sort of like lag, or they do their own thing for a little while, and then when Bitcoin makes its decisive move, they play catch up, right? Let's take a look at a weekly chart. So again, look at this situation, right? Oh, okay. I'm just trying to adjust my mouse over here. So this is a weekly chart. Now, good location, sure, but there's some problems with this, right? Look at the midterm trend. I mean, this is pretty much lower highs and lower lows, right? Bearish. You're at a support right there. You have a lower high that has not taken out anything, right? Similar to the Bitcoin situation, a lower low is likely. So it's a good location, but no way. I wouldn't touch this thing. All right, I wouldn't touch it as a swing trade. And if you're interested in inventory, any price is a good price, but I certainly wouldn't be skewing on the larger side here, if that makes sense, because lower prices are likely to follow. Does that make sense? So while, yeah, the location is decent, the situation is not supportive. Again, these garbage coins are not likely to perform very well for quite some time. Keep that in mind. Rising rates will have that effect, and the Fed hasn't even physically began raising them, right? Just let me show you real quick. Let me show you this, okay? This right there, that's the 10-year note, okay? That's the weekly of the 10-year note. Look at that sell-off that we've had over the recent few weeks. That is a dramatic rise in interest rates, okay? So obviously it's pricing in aggressive rates from the Fed, and the Fed is not going to be turning that around anytime soon. So that means altcoins are not the place to be putting any money, all right? Altcoins, penny stocks, small caps, growth stocks, they're all going to suffer, all right, in this type of environment. So, waiting or being more selective is a good choice. All right, so that's that one. All right, let me jump over to the other chat here. All right, now here we go with some questions. See, I got to yell at these people a little bit in TradingView. All right, cool. Nice to see everyone. All right, so Stian, B-Pro. Stian, you always ask me about that one. B-Pro, USDT. Okay, so a lot of these things, you see, they get tricky because they do their own thing for a little while, right? They kind of do their own thing, and then when Bitcoin reminds them that they're not leaders, now you see this situation. So what's going on with this? Well, you have a lower high right there, okay? It's breaking this minor support. Certainly not a place to be going long, and there's no signal to go long. That's a pretty ugly situation. Lower high, trying to push that low, breaking this, basically this trend structure, basically. All right. It's telling you that there's a, change there. Let's look at the weekly chart real quick. Okay. So look at this weekly chart. I mean, you're coming from these lower highs. The recent high, right? This recent peak is not really, does not show any type of structural progress. Okay. I mean, it looks nice and dramatic on the smaller time frames, but hasn't even come close to those highs. So this thing is basically in a consolidation. If you're in a consolidation, expecting new highs is not realistic, right? So in something like this, if you're in this, that's a sell signal. On the weekly, you took out the previous week's low, that's a sell signal. So if you're in it, it would call for adjusting your risk, whether that means tightening a stop, taking a small loss, or whatever, reducing your position or your exposure. That's what the chart calls for. And if you're not in it and you're looking to get in, wait. You have plenty of time to wait here for these lows. 002, what is that? 0025? Yeah, so basically, yeah, 0025 area, right? That's that low right there. You have plenty of time, no rush for these things. You are certainly not missing out on anything. So these type of coins, I mean, it's a cheap coin. These are good for basically if you're going to play them at all, longer term inventory. And I got to fix the stupid mouse. Okay, that type of stuff. These are very tough to swing trade, I think, because they can be very, very noisy because they're relatively cheap, right? Does that make sense? So no rush to do anything here. So you have that 0025, and then you have a support coming up over here, this old resistance, 0043, around there, right? That's what you're looking at. Those areas right there, if you're interested in doing anything with it, as far as maybe buying something at support. But I do not, again, these things are not leaders, they're followers. And if Bitcoin does test 35K and breaks 35K, these things are probably going to break lower. Okay. That's why there's no reason to rush. Let these things stabilize. Let Bitcoin stabilize. And in the environment that we're in, it's going to have a hard time doing that. Okay. So being more conservative certainly makes sense. Okay, Steen. So thank you for asking. All right. Hey, King, good to see you. King Bear. All right. Prepare for the bear. Mindmint. Thank you. Okay, no problem. I will just ask my question and leave. But okay, no problem. My question today is about the significance of the global data on the open interest and whether significant imbalances of longs versus shorts ratio can give a hint. Okay, that's an interesting question. Okay, hold on a second. Let me go back to that. Imbalances give a hint to the state of the market and next potential moves. You're not going to get next potential moves from that. Okay, first of all, the global data on open interest. I mean, that's sort of like the first thing that comes to mind is the Commitment of Traders report, which is a weekly report that comes out from I think it's the Chicago Board of Trade, and it shows you the retail money versus the professional, the paper they call it, the institutional money, and you see who's positioned. Like, is retail more long or is retail more short? Is institution more long? Are they more short? And it's usually based on futures, right? The futures contracts. But stuff like that, again, it's just another layer of complexity. I don't think it's very helpful. It can maybe help give you some context, maybe, but really all you need, again, less is more in this game. All you need are levels, some sort of sense of trend, right? Some sort of bias, and levels to anticipate, right? I mean, basically, that's really all you need. And then, of course, some system or some set of rules that's going to help you identify a certain type of activity that allows you to confirm your idea and help you measure the risk, right? And also, you need some sort of structured way to determine your profit targets and that kind of stuff. That's pretty much it. For short-term market timing, that is all you need. All this other stuff is just, again, this game, like I said, is full of garbage and nonsense. 99% of the information that we consume as retail traders is completely useless. Think about this for a minute. If all this stuff, right, you could go on YouTube, you could go on the internet, you could Google all kinds of stuff on how candlestick works, on moving averages, on oscillators, and volume this and all this other garbage, right? With all this information that's available to everyone, how come retail traders are not reporting better results, right? It's still everyone's losing money. Why is that? With all this information available, it's because the information, number one, provides no advantage at all. Okay, number one. Number two, there are forces in this game that are basically set up to rob you. All right. For one, your own intuition and conventional wisdom works against you, right? That's the nature of, that's just human nature. It doesn't work in an abstract environment like a market. We think that, we look at a chart and we think that we have a complete piece of information here because it's a chart, right? And we see some candles and this and that, but we don't know what's really going on inside the candles. So the chart is only telling us what's after the fact, even the current candle. So you have to understand, we need to be able to look ahead, okay? And we need to be able to consider everything in abstract probabilities, because that's what's really going to help us identify risk and get a better sense of what is likely, right? And that's where we can position ourselves. You have to understand, investors are typically not rational. And when you're listening to people, fake gurus, or I see these brokers and I see these other platforms, they promote wisdom of the crowds as if it's a good thing. It's not a good thing. It's if you don't know what you're doing, it's good if you're a contrarian, because that's the most value that information is going to give you. So my point is, again, understand that all this extra information doesn't help. It only really confuses you, or it's just an illusion of oh, I'm informed. Oh, I'm using this special stuff over here. And, yeah, right. It's just an illusion of control. All right. We have no control over the market. The market is more of a game of chance than anything else, in my opinion. Right. There is some skill to it, but the skill is not where you think it is. People think the skill is, oh, I can read a chart. Oh, this oscillator. Oh, yeah, right. That's where people think where the skill is. It's not. It's in risk. Okay. Quantifying risk and being able to take risk. Also, patience. That's another thing that's, I don't know if you can call that a skill, but that's really like a key factor that you need. Again, no one wants to hear about patience. It's boring. All right. So I hope that answers your question. Thoughts on, natural gas. Sure. I don't get that one very often. Let's take a look. NG. So NG, let me pull that chart up here. Natural, is that, I guess that's natural gas, right? Let me see, NG1. Yeah, okay, so let's take a look here. Maybe I can get like a natural gas CFD. You see, it's like a natural gas USD or something. I think it's nat gas. Yeah, look. Let me see here. I got these spot, I guess I could use a spot chart. It's going to be the same thing, right? Nat gas. Oh, Leia, look at that. I guess it has to do with the whole geopolitical situation. Be careful with these geopolitical situations, okay? There's a lot of this kind of stuff going on. This is the daily chart. That's an interesting chart. Nice chart. I mean, look at that thing. It's vertical. Looks like an altcoin. Here's the weekly chart, okay? Look at that. Quite a move. All right, now let me point something out. My Elliott wave people. What do you see here? This is a bottom, right, where we begin the count from. This first leg right here is our wave one, okay? This leg right here, see that? Going up to here, that's wave one. Wave two consolidation, right? We have this large wave three. It's not the smallest wave, right? Then what do we have here? Bottom of wave four, not overlapping the top of wave one, right? So the criteria is met. And then what is this here? Wave five. So what does that mean? Not a good time to get involved, because after a 5-wave completion, a corrective wave of the larger magnitude is likely to follow, right? So you have this, certainly a wave 5 took out the high of wave 3, right? Wave 5 is confirmed, but definitely not a place to buy. This is potentially a place where you can get fake outs. Again, this is driven by the geopolitical situation, obviously. So this is an extremely vulnerable place in the face of a strong dollar. All right. Have you seen the dollar index? Have you seen this thing? Look at this. Look at the dollar. That's a weekly chart of the dollar, right? That looks like an altcoin. So you do not want to be buying these things when they're going vertical like that, right? You don't want to be buying things like Nat Gas when you have the dollar. Basically, I got the wrong contract on here. Where's the one that I just had here? Pepperstone. Okay. When the dollar is that strong and interest rates are rising, it's going to eventually bite into this. Okay. So everyone's excited. I know, people see this and think it's going to just keep going like that. If you're going to play this game, you have to play this on a day trade level, which, I don't day trade natural gas. I wouldn't recommend something like that. You're playing momentum. As soon as the momentum runs out, you need to be out, right? Just like when gold breaks out, I told people, if you want to try to take a little piece of that, as soon as it turns the wrong way, you have to be out, because the corrective move on this, the larger magnitude corrective move, if this entire structure is like a wave one, then wave two can go all the way back to the bottom of that. That's possible, but more than likely you're looking at like a 38% retracement type of thing, typically. Okay, that's like all the way over here. So that's the thing with Nat Gas. Thanks for asking about it. Again, be very careful with these geopolitical things. They look good for the moment. High risk location, I wouldn't touch that thing. Okay, an aggressive play on something like that would be to do like bear put spreads. But I don't even know what the option premiums are like, or where you'd even trade options on natural gas. I mean, you probably have to have an account with like a particular broker for something like that. You're definitely not going to get them on the CFDs. Okay, so anyway, good question though. Thank you for bringing that one up. Certainly don't follow that one. All right, let me see. All right, so I'm going to do one more here on TradingView, and then I'll jump over to the other chat. A question for your personal opinion on Bitcoin. Is this an asset worthwhile for long-term investment? Does it have intrinsic value and purpose for our current financial system, or is it just another speculative bubble asset that has captured you? Okay, good question, Freeloader. Well, look, basically, Bitcoin, you have to understand its economic purpose, which obviously it's an anti-inflationary instrument, right? It was made, basically, Bitcoin was created as a alternative to our central banking system because of the situation that we had back in 2008, right? That's when you read the white paper or whatever, right? Or the conspiracy theory, whatever, blah, blah, blah. That was the purpose of it, okay? Bitcoin is a store of value. So as far as your question, is it as a long-term investment? Yeah, I do believe in Bitcoin because of the technology. And it does have a purpose, and it does have a real world value because people use it to transact, okay? And it does have that purpose, right? And again, store of value, similar to gold. And if you're in some country and that country decides that they're going to just overinflate their money, and you have access to a computer, and you can move your money into Bitcoin, right? We saw that with the ruble temporarily. So Bitcoin does serve an important economic purpose in that sense, and it's an alternative that is relatively new. If you look throughout history, there was no such thing unless you could buy gold, right? But what would a government do? Oh, gold is legal, you can't buy gold. In fact, we're going to confiscate your gold. So Bitcoin is an alternative to all that. So yes, that's why I believe it does have some intrinsic value in that sense. As far as speculative bubbles, the altcoins are garbage. Okay, most of them. There's too many of them, number one, and they are a result of just too much free money floating around. And that's why most of them are just like the dot-coms of 20 years ago. Most of them, you don't even know what their names are, right? There's only a couple that are still around today, like Amazon and Yahoo and eBay still around. Those were like the big names back then. But there's tons of them that you never even heard of. So that's what the altcoins, I believe, most of them, I mean, there's over 8,000 of them. They're just going to go nowhere, right? There's no way money is going to go in and support all of those altcoins. It's basically developers just robbing people. That's what that is with these promising white papers and all this other garbage. They don't prove anything. They just, oh, look, we have this problem and we're going to solve it. And they just rob you. Okay. So the only problem that they're solving is, when they're going to buy their new car, not their altcoin. So just something to keep in mind. It's a good question. All right, let me jump over to the other chat here. So Tesla. All right, Ben, that's your third question. So let me I'll go back to that if I have some time. because I want to keep this at an hour, and I have a bunch of other questions here. I got Alex from Romania. Got my Romanians, of course. I don't see Schwartz. Where's Schwartz? I'm going to have to cancel the chat. Let me see. Is he in here? Is he in here? Let me see. I don't see him. Okay, I'm going to have to cancel the chat, everyone. I'm canceling. I'm joking. I'm joking. All right. So let me see. Schwartz is international man of mystery. You know, a lot of international stuff going on. He's busy. So let me see here. Can you have a look at MHK weekly? It seems to be close to the starting wave 5. Okay. What is that? MHK? Let's take a look. MHK. That's okay. Let's take a look here. Is this correct? All right. You said here that it seems to be close to starting the wave 5. All right. Okay, so let's take a look at the weekly chart. Start with the weekly chart here. And let's see what's going on. That's a nice little pullback you got. Wave 5. Okay, so I see, right? You got 1, 2. There's certainly a 3. Okay, 4. Just about hasn't overlapped 1. So yeah, okay, so you have that. I see all that. So you're still in the wave 4. Okay, this structure is a wave 4. And these wave 4s, see how persistent? This thing's been in wave 4 for weeks and weeks and weeks. Look at this thing. Right, you had the consolidation here and it broke. Okay, so, and by the way, Bitcoin can do something very similar to this, or gold, like gold, which has been in a wave 4 for over a year, right? They're very persistent. That's the type of wave that I'm anticipating for Bitcoin for some time, until we start to see clues of change. And those clues are not going to come from Bitcoin. They're going to come from the bond market, okay? And there's no change there yet. So to answer your question, yeah, I like the idea that this is a wave 4 bottom, likely, possible. You have a possible double bottom. You have a weekly pin bar. Is that a weekly pin bar I see there? Yeah. Let me open this up again. Okay. Yeah, that is a weekly pin bar. Man, I got to fix this thing. Sorry about that. My mouse doesn't respond properly here. Okay, so you can see that weekly pin bar, right? So there's a buy signal there on the weekly of this thing. Again, something like that, if you're interested in a swing trade, something like that would make sense. You can define your risk at the 117 low, but just keep in mind, you know, anticipating that you're going to get the wave 5 from this point, while that is a decent, you know, idea, you're still fighting the structure. Okay, so the actual confirmation that, you know, you're possibly in a wave 5 would be when you take out this high over here. Okay, when you take that out. Until then, you may still be just gyrating around in this wave 4. So what do? Well, if you get involved in anything, you certainly want to be taking profits as soon as you reach at least a 1-to-1 reward risk in this environment overall. I mean, I think 1-to-1 is very appropriate. Okay, you don't want to be looking for like 2-to-1 or 3-to-1, because it's just things change really quickly on both sides. Right? I had a pound trade. My pound trade, it took like 2 weeks for that thing to reach its 1-to-1 target. It was like 140 pips or whatever, and there was a lot of nonsense in between. Okay, so just something to keep in mind. But yeah, I like the location. I like the wave count, makes sense. Right, wave 5 is likely to follow. But again, now this is a stock, and you have to also just keep in mind when you're dealing with a stock. I don't care what stock it is. When you're dealing with a stock, you have to look at the S&P. Okay. Now look at that. So while your stock there is at a potential wave 4 bottom, this is the S&P. That's not good. Where does this thing close at? 44.13. Oh, that's nasty. Is that right? What's the low? 44.13 is the low. We're at 44.13 right now. The market's still open. Okay, so it's closing on the low. That is a pretty nasty move. It's minus 76 points in one day, which is a big move for the S&P, right? Anyway, my point is, with that type of weakness, and I talked about this, right? People know I've been talking about the vulnerable area up in here. So this thing is likely to, the momentum is likely to continue. Yeah, you do have an old support in here, an old resistance, which is likely to act as a support, but there's no way to know if you're going to get like a decent bounce. People are anticipating like, oh yeah, we're just going to pull back, right? And that's going to be our wave 4. And then, you know, we're going to have our party again, right? That's what people would like to think, because all they see is, you know, a push beyond these resistances, and then they're thinking like high or low. But what you have to keep in mind is the context of the environment. The context of the environment does not support the idea that we find a bottom here and we make new highs. The environment doesn't support that, okay? The Federal Reserve is not behind this anymore. So you have to basically keep that in mind and have your expectations should be more conservative. Does that make sense? So going back to your stock, with that in mind, you know, your risk is going to be greater that those supports don't hold, okay? If this thing tests this low over here, what is this low? 41.54. I mean, if the S&P makes it there, we're going to see weakness all over the place, right? Most stocks are going to be affected. So just something to keep in mind. All right. Anyway, hope that answers your question. All right. So Kai, dollar index, right? So I pointed that out quickly before. Let's just take a look at it in a little more detail. Dollar index, higher high. Now I've been bullish on the dollar index since August, right? We had this triple top. This is tricky, right? Triple top looks like it's a consolidation, which is a higher low consolidation, okay? So even though it looked weak at some points, I was pretty confident that this thing's going to break out until we change the structure. Again, this is a reflection of the bonds and interest rates. We're on the highs. So it is a higher high, which, you know, makes sense when you have a bullish trend. This is going to affect, obviously, you know, it's going to put pressure on everything, as we could see with the S&P. Forex pairs, okay? Euro is going to suffer. Pound is going to suffer. They're all going to suffer as long as the dollar does it. So we'll have dollar pullbacks, right? And the first dollar pullback I'd be looking for is a retest of the old resistance. This is actually an ideal setup. If you can get the retest of this old resistance, you know, we talked about that, right? Inversion or role reversal, whatever you want to call it. You get that, that could be a trade opportunity for swing trades. What would I trade? Well, pound, right? Pound, this if we pull back into this area here, that would be a bounce in the pound, setting up for a short, right? And then if the dollar finds support here and reverses up for that next high, then, you know, you have your short in the pound or possibly the euro, right? That's where I'd be looking for something like that. Or maybe it's the Aussie dollar, right? Those Aussie and New Zealand, they're a pain, those pairs. They really are a pain. I like the British pound because that thing moves. When it moves, it moves. It doesn't waste time. All right, anyway, so that's what I think about the dollar. It's strong. And, you know, as long as the bonds are doing what they're doing, I mean, look at this weekly chart in the dollar, right? It's working its way all the way back up to this resistance up in there. It's got plenty of room before it gets there, okay? So there's plenty of room. What is that? That's around the 102 area, plenty of room. And you have to keep in mind, the dollar chart itself, you can't sit there and make judgments on this thing alone because these charts, especially something like the dollar, does not trade in isolation. This is interest rates, right? So keep an eye on that bond market because when the bond market has a significant change, that's when you're going to see a change in everything. But as far as right now, you know, the bond market may bounce and gyrate here and there. As long as that trend stays intact, these things are likely to stay intact. And when the trend changes, it's probably not going to go from like bullish to bearish. It's probably going to consolidate for some time before those type of changes occur. Does that make sense? All right, so I hope that answers your question. That is the dollar index. Okay. All right, hey, Elizabeth, good to see you. Thomas, good to see you. I know it's too soon, but how would your trading strategy adjust to the rare as known as V-shaped recovery? Thomas, I don't know where you're getting that from. They used to talk about that, like, you know, when we were getting, when the market was pushing lows or whatever, they'd be like, oh, we're going to have a U-shaped, we're going to have a W-shaped recovery. Oh, we're going to have a V-shaped. Oh, I don't pay any attention to that stuff. I mean, how would your trading strategy adjust to the rare astrological phenomenon? It's just a level. If there's a level and there's a particular bounce, I'm usually not going to participate in the V shape itself. I'm looking for adjustments after that, right? V shapes are very hard. You're not going to get the bottom of it, for one, especially if it's like a low that hasn't been touched in some time, because it just comes out of nowhere, right? But you know, in order to get something like that, you need a dramatic catalyst. right? When we had that back in 2020, what was the dramatic catalyst? The Federal Reserve said, we're just going to print as much money as we need to fix things, and we're going to write stimulus checks and mail them to everyone, right? That was a pretty dramatic catalyst, and that was inflation time, right? That was the beginning of it. While everyone was all focused on all the bearish, negative, blah, 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 the Fed was putting as much money as they possibly could into the market, knowing that that's what would basically, keep things going. And now the Fed, typically when the Federal Reserve makes moves like that, usually they overdo it. We saw the results of that with all these bubbles. I mean, come on, NFTs. What do you think that was a result of? And now they have to pull back hard, right? The Fed's like, all right, we overdo it, and then they have to now overdo it the other way. That's historically the Fed does stuff like that. All right, let me jump over to the other questions here. If I missed your question, by the way, I apologize. Yeah, because I'm trying to keep this on time. So I got a good another 10, 15 minutes. If I miss your question, I do this every Monday. So please come back and ask again. All right, question for your okay, I went over that one. All right, let me see here. Okay, cool. Opinion on very long-term SOL. Stronger than ETH, talking about a year. Okay, so Solana, right? Again, this is one of those, look at this. So this was like, let's go to the weekly chart first, right? Again, this was one of those nonsense hype coins, right? Nonsense. Look at the wave count, right? 1, 2, this is super clear. 3, 4, 5, right? This is 5, top of 5. And look what you get there, right? A broader corrective move. That's why I tell people, stay away from these highs. Anyway, all right, I'm not going to sit there and rant on that like I do, but I have to throw some Seinfeld impressions in there. So as far as long-term goes, I mean, this thing is likely to consolidate, but keep in mind, this move right here, this is not good. Okay, that's not good. And again, this is a follower. It's not a leader. I don't care what their white papers. I don't care how great they are and all the problems they're going to solve. And they're the next Ethereum, blah, 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 nonsense. Okay, they're all garbage. And so if you're interested in the long term, there's a sell signal in there right now. So, if you're in some, I don't know what to tell you about that. But if you're looking to buy some for long term, wait for support levels at least. You got plenty of support levels and plenty of time. Those are your support levels on something like that. If you're really interested in buying inventory, you have an entire zone in here. That would be the place to consider putting some on. But keep in mind, I would keep an allocation if you were going to get involved in these garbage coins. I mean, some people believe in these things. Okay, fine. You want to throw some money at a joke. Sometimes they turn out to be a lottery ticket, right? I mean, we saw plenty of that. But keep in mind, it's a lottery ticket. There's no skill to throwing money at garbage. Okay, so I would keep the allocation small. So if this thing happens to go to zero, you're like, all right, I can handle it, right? That's what you have to do. These are not worth putting like $100,000 into or anything like that. You got to be nuts. Unless you have like 50 million, throw $100,000 to something. That's like, it's like $100. Okay, fine. But yeah, I don't really have much of a long-term opinion on those. They will come back when the speculative money comes back to the market. What do we need for that? Rates to go lower. Okay, that's not happening anytime soon. So these altcoins are likely to suffer, all of them. So again, if you want to accumulate some, have an accumulation schedule and keep your overall allocation small. So for example, let's just say you have a $10,000 portfolio. You're not going to put all $10,000 into garbage altcoins. That would be a bad idea. But if you want to put maybe $500 worth, maybe $1,000 worth, right? That would be, I mean, at $1,000, that's 10% of your portfolio. That's kind of a lot. All right. Assuming you have a $10,000 portfolio, typically you want to keep your allocations at like maybe 5% of these because they're highly speculative and there's a good likelihood that they go to zero. All right. So that's the way you have to look at it. Not, I'm buying the next blah, blah, blah. If you have optimism about these things, you're being irrational. All right. Anyway, I hope that answers your question. All right. What signals can we look for to check out to check the very bottom of Bitcoin there's no way to know where that bottom will be. So when it comes to Bitcoin and levels, again, we have levels that we can anticipate. My next level on Bitcoin is 35K. So either the market gets there, okay, or it does not get there, right? So right now it looks like it's pointing that way. We'll see. There's support between 38 and 35K. There's like a range. It's not a particular level. So first I want to see the level that I want to see. It's either 35. If that level breaks, we're looking at 30. If 30 breaks, we're looking at 25. Okay, that's it. So the market has to make that decision, not me. When we get to those levels, then I wait for certain types of confirmation, and then I decide if I want to take the risk, keeping in mind that this is not a highly supportive environment. So my expectations need to be adjusted to be very low or even more conservative. I'm conservative to begin with. They have to be even more conservative, all right? Because you can't expect much when money is not coming into these things, all right? Thank you for your articles. Hope is not a strategy. Oh, okay. Save me from entering losing positions. Yeah, well, you have to understand something about hope. Hope is used everywhere for everything. Okay, I see it all over the place, not just in this industry, but this industry is full. The fake gurus make a living on hope, right? Just selling hope to people. You know, I thought about something 20, 30 years ago. There was no fake guru situation like we have today. But you know, we had the fake gurus. All they've done is basically replaced what we've had previously. What was previous to them? We had big name analysts that would show up on TV, like someone that would work for Goldman Sachs, right? You had someone like that. You know, you also had stockbrokers that would call you up, right? What would a stockbroker do? Tell you a good story. Why would the stockbroker tell you a good story? Because they want you to buy this stock. So what would they feed you? Hope. Okay, so basically, fake gurus are basically the same thing. They amplify hope. And we love, as human nature loves hope, but it's bad for markets. Okay, it's bad for your money because it's not rational. All right, and that's why people have so many problems. All right, cool. Hey, Scott, good to see you. Welcome back. Haven't seen you in a while. How are you? All right, Thomas, for specific trade timing, do you give any weight on nested patterns? I know you don't make decisions off of, but they're said to have I'm not sure what you're talking about there. If you're talking about nested patterns like a double bottom or like a failed low or something, yeah, I do put weight on those. That's in fact, it's one of the steps that I use. Step what is it? Step 5, I think it is, patterns, and we have candlesticks. So yeah, I certainly look at nested patterns. And what I mean by that is double bottom, double top, higher low, failed high, right? So I do look at those. And I do keep those. Those are part of the decision-making process. If I see a double bottom and I see a pin bar low at a double bottom, and that happens to be a higher low, that nested double bottom is a higher low, I'm very interested in that, right? So it's even more compelling when you have the pattern. All right, so good question. Let me see what else we have here. We got, okay, we got, sorry, I can't see your name. Well, RM Bonjour from the UK. Well, welcome. All right. Thoughts on when gold will break its all-time high and move up after its couple-year consolidation? The macro environment is ripe for it. Well, what makes you say that? Let's take a look at gold. Why is the macro environment ripe for gold to break out? It's not. Dollar is going higher. Strong dollar and strong gold don't get along, right? And the dollar is still the world reserve currency, not gold. So while there may be some geopolitical pressure for gold, right? And that's why we see these little gold moves getting everyone excited. No way. Okay. Rising rates means stronger dollar, bad for gold. So I wouldn't expect the breakout anytime soon for that reason, right? You have these little movements. Look, gold ran all the way up to that wave 4 high, right? Look at this move on gold. This is the weekly chart on gold. Ran all the way up to that wave 4 high. Got everyone long up there, right? All the gold experts, gold's going to 5,000 again, right? No gold in Fort Knox, all that nonsense. And then it gets hammered. Gold is still inside the consolidation, and until we see inflation, that inflationary situation, right? Gold's going nowhere because the Fed is doing its job, right, to fight inflation, And gold is typically used as an inflation hedge. Now, again, we have geopolitical, but geopolitical is temporary. Keep that in mind. Oh, it's going to go on for years. No, it's temporary. So that's not going to that's not a good catalyst to keep gold going. Definitely not. And you have a rising dollar. So I don't think it's going to break out anytime soon. So as far as gold goes, I would be interested wherever you could find supports on gold for short-term moves. I mean, you have a support right there. What is that? Basically 1890, that 1890 low around there, right? You have a minor support there. You have another support, but what is this level over here? You have a level here. What is that? 1890 again, about, right? 1870, I'm sorry, 1868. So basically 1870. Those are your levels on gold. And if you get some type of reaction there, it could be worth a swing trade. Or maybe you trade the CFD and you want to take something out of that. Okay, fine. But as far as long-term gold, no way. Look for range lows. If you want to put on like a gold investment, look for like the 1700s, 1600s. You say, oh, no, it's not going back to 1600. That's the range low. I don't know if it's going to go back there, but if it goes back there, that would be the place to consider something like that. Again, in the face of a rising dollar. Now, if somewhere along the line the dollar changes its tune, and interest rates change their tune, and the Fed changes its tune, then maybe we'll get that gold rally. Okay, but right now, as long as those factors stay intact, I'm not optimistic about gold at all. Okay, gold is more likely to be weak and more vulnerable in a strong dollar, in the face of a strong dollar. So good question. Okay, given that not many people are asking questions, I put out also another. So my strategy is more or less long-term investment. Okay, but I nevertheless still like to buy, sell up to 60%, accumulate more inventory with the same amount of money, especially, okay. My fear is that when I eventually be wrong, it breaks out of the range at some point. What is your opinion on such strategies for long-term investors? Until now, I have successfully accumulated 20% more coins. Okay, so this is a good question. Okay, longer term, the longer the term your strategy, the easier, right? The less skill involved, the easier it is, especially if you're less experienced. There's nothing wrong with longer term strategies because they require less decision making and they're less confusing, right? So if you're sticking to like larger time frame levels, yeah. Now, one of the risks as a long term is you're exposed to the broader move. If that move is adverse, you're going to get caught, okay? So there's really not a whole lot you can do about that except manage your risk with your size. So when you're pulling into those lows, you don't want to get too big too fast, right? And you want to make sure you have a very tight accumulation plan, meaning, okay, I have this much money set aside. This is how much I'm going to buy. This is the rate that I'm going to buy at. And that's it. Once I get into my position, when I'm all in, you don't keep putting more on because there's going to come one point where when there's a real, sell-off, like a real one, what's a real sell-off? Bitcoin going to 20K, right? That would be a real sell-off. Can it happen? It's possible. There's no way to know if that's going to happen. So you have to be prepared. You have to basically accept the idea that you will get caught. Okay. And it's just a matter of adjusting your size and what you're going to do to make sure you're not over leveraged, or hopefully you're not using leverage. But that's where people get into trouble. They get too big too fast, and then they get caught in that really big move, right? That's not unexpected. Like it's right now, I would say it's unexpected for Bitcoin to go to 20K, like in the next couple of weeks. That's unexpected, but it can happen, right? It's a low probability, but it can happen. You need to be prepared for those type of things. So I hope that helps. It's a good question. But typically, when people ask me, how should I start out? I always tell them investing is easier. If they have no experience, it's much better to start out as an investor, or at least a swing trader if you want to get into a little bit more market timing type of stuff. Anything shorter than that, you're asking for a lot of trouble. Okay, what is your price prediction? I don't have price predictions. I don't predict anything. I have levels, and the market does all the work. Okay, people that predict stuff, they're just fooling you. I hope you realize that. No one knows anything. Right? And there's no way to predict anything. No one knows what the price is going to be tomorrow or a month from now or 3 months from now. There's no way to know. Markets are random. So what I can do though is I can figure out levels, and then if the market provides an opportunity at some point, I can do something. Otherwise, there's no prediction. So get that out of your mind. It's a really bad way to go about this. But that's, again, it's intuitive. That's what people think. Oh, I'm gonna know where the market's gonna be in the future. No such thing. All right, but a lot of fake gurus will tell you though that they do know. Hey, Erhan from Turkey. All right, cool. Welcome. All right, hey Douglas, good to see you. Erhan, okay, GMT. All right, so all right. Would you consider a trade at the double bottom BTC 35K? All right. So I'm going to answer a couple more questions and I wrap this up because I'm over now. I'm over an hour and I got to keep my 1 hour promise. Otherwise, I'll talk about this stuff for 3 hours. Some people here are like, it's like 4:30 a.m. in some of these countries or something like that. I mean, in Turkey, it's got to be like midnight. Okay. So you don't want to be listening to me for another couple hours. You guys have to sleep. So anyway, I'm going to wrap this up here in a couple of minutes. If I miss your question again, I apologize. I got like a million questions in TradingView now. All right, there's no way I'm going to be able to answer all those. So if I miss your question, I apologize. All right, let me jump to a few more questions here, and I'm going to wrap this up. Okay. So Erhan with GMT USDT. Let's take a look. All right, so Douglas, I got gold. Went over gold. All right. So GMT USDT. Let's see what's the story here. Interesting. So this is good because this is where I'm not familiar with this, right? It's a new coin to keep an eye on. All right, good one for the radar. So let's see what we have here. If I can just open up this chart. Man, why does my mouse act like this? Hold on, I'm just trying to open it up here. So now take a look at this thing. What do you guys see? If I can open it up, maybe I can open up this way. There we go. What's wrong with me today? Today's Monday. That's the problem. All right, so what do we see here? 1, right? It's a 1 right there. My Elliott wave people. 2. These are clear-cut impulse waves. That's what I look for. Clear-cut. 3, right? When you waste your time counting like little nonsense moves, they're a waste of time. 4, okay? So what do we have? Those are 4 complete waves and a possible wave 5 in progress right now. So we don't have 5 waves complete, which means there's a good chance that you get a wave 5 to follow. Wave 5 typically takes out the top of wave 3. So you have some bullish potential here. Okay, now this thing is sort of on its way. How much is this thing right now? $2.50. So, I mean, at this point, if you bought this thing right now, your risk is defined from this price here, which is what, $2. So you're looking at what, 50 cents basically of risk. So you need to make at least 50 cents, right? Is that right? Let me see here. Yeah, $2 is the low. Current price is $2.59. So, all right, so it's 60 cents. The high here is $3.13. So you need to do a little bit better than that high, at least for 1-to-1. But keep in mind, there's still plenty of potential to fail in here. Just because, a fifth wave is likely doesn't guarantee that you're going to get a nice clean cut fifth wave. This actually could still be part of a wave 4 consolidation, right? There's no way to know if we're going to get a nice simple wave 5. Wave 4 can gyrate a little bit before it breaks out. Keep that in mind. Elliott wave is far from precise, but what this says is, if wave 5 unfolds, a decent expectation is at least the test of the high, at least, and in theory should break slightly higher before the fifth wave is complete, right? So I like it. Definitely a good one for the radar. Now, if this thing consolidates instead of going higher, and it's funny because Bitcoin's getting hammered and this thing's doing its own thing. So it wants to do its own thing, fine, right? You have people that hype these things, whatever. You have like a chat room somewhere and herd mentality, blah, blah, blah. You want to try to take advantage of that? Okay. But the more conservative thing, if this thing produces a double bottom in this area right here, someone was asking about the patterns before, that would be more ideal, right? A wave 4 double bottom, higher low, followed by a pin bar. Like something like that would be a nice setup if you can get that. If the market, if the market delivers something like that. Does that make sense? So anyway, I like it. Thanks for calling this one up. GMT USDT. Thanks for bringing that to our attention. We're going to have to put this one on the radar, chat room people. All right. So let me see here. S&P at 44.12. Let me see. Okay, hold on. All right, so here's what I'm going to do. Your levels, your levels of are why I come here. Oh, wow, those are some big names right there, Raul. Sure, you are financial, but you're. Well, I'm glad you like my my sense of humor. Usually, I get complaints and I get people leaving the chat. But you forgot Larry David. I mean, Larry David is really like that's the guy I look up to. You ever see that FTX commercial? I mean, he is a genius. Okay, might have missed this, but based on what you're saying, where would we allocate now? All right, if you're talking about Bitcoin, I mean, you can allocate at any prices. All right, it's just a matter of size. Where's Bitcoin right now? Look, 39.7. We broke 40K. So look, there's no buy signal. When you're taking on inventory, small bites, you should have an inventory plan. So where do you allocate? Anywhere. There's no particular levels. It's size that really, it's a sizing game. So, if this is like your first allocation, that's pretty good. But this thing can go to 30K. It's possible. It can go to 35K. So you have a schedule once per month. No matter where this thing is at, you buy a little bit until you reach your allocation. That's how you play that game. I've explained that like a lot of times. Not here, but in other sessions I've explained it. If you're not clear on that, then it's better to, at least if you're going to allocate anything, allocate small, because getting too big too fast is a big problem. Okay, people go, oh, it's a low. I'm gonna throw $50,000 at this thing. That's not what you do. That's not how you do this. All right. Anyway, all right. So I just saw a couple more questions. These rants are great, though. A lot of retail investors and traders have to hear. Kai, they don't like my rants. They want to be lied to. Retail traders want hope. They want to be lied to. That's why fake gurus do so well. If you want to make money, I always tell people, you want to make money in this game, become a fake guru. Anyone could become one. All right, Elizabeth, would you consider a trade at the double bottom? Yeah, if Bitcoin produces a double bottom at 35K, now just keep on. That's a good question, Elizabeth, because here's the thing. Let's take a look at 35K real quick, and then I'm going to wrap this up. So this is 37. This is the 34K. So this blue line over here, right? That's the 35K area. So if we get a double bottom within this area, sure, that would be worth a swing trade. But I can't just focus on the double bottom. I also have to keep in mind the context of the overall structure and the environment. I have to keep in mind that this is a lower high and that the environment favors a break of the support. So if I do get a double bottom there, I would be open to it, but I would also be very conservative as far as profit targets and stuff like that. And I wouldn't expect a lot out of it. Like I wouldn't be expecting, hey, Bitcoin 100K because we got a double bottom at 35K. Does that make sense? Meanwhile, if Bitcoin happens to bounce from like 35 to 38 or something like that, or 39, you're going to have all your fake guru friends popping out with their videos telling everyone that Bitcoin's going to 100K again, right? Not you particularly, but you know what I'm talking about. So anyway, good question. Can we create a token with values? Yeah, Douglas, let me know about that one so that I could buy it before everyone else, and then I can lure all you guys into it, right? Buy my garbage coin. And yeah. Anyway, I wouldn't do something like that. That's what altcoin developers do and fake gurus. I don't do that. I have ethics. Remember, I'm a chartered market technician. We have a code of conduct. I don't think we're allowed to make altcoins. I have to read the code of conduct again. I don't think it said anything in there about altcoins. I don't think we're allowed to make those and then try to sell them, push them on people. Anyway, all right, guys. Yeah, I got to wrap this thing up. I'm over my time here, and I try to stick to an hour, but you all know I can't because I like to talk too much. All right, so let me just see real quick. I just see so many questions, and I just like answering them. Okay, AT&T, Alex, they still exist. Take a look at NASDAQ. Okay, Avi, NASDAQ and S&P, they're getting hammered. Just there's not much to say about them. They're at minor supports. They need to there's going to be some time before they do anything. Okay, I'm not going to go into detail right now. I shorted Bitcoin at 46,500. Should I sell? You mean should you cover? At 46,500, that's a great price. Well, to be honest with you, there's no reason to cover yet. There's no buy signal. So you can tighten your stop, trail your stop, let this thing run a bit, see where it goes. But it's always a good idea. I always tell people, if you have a nice profit, it's never a bad idea to take something off the table, maybe 20%, because you're at a low. So, I mean, chances of a bounce are possible, but there's no bounce, obviously. There's no buy signal, there's no pin bar, there's no inside bar, there's nothing there. So let the momentum run, right? Let it run. But like I said, it's never a bad idea. It's a good habit just to take something off, just to lock something in. Don't let greed get in the way. People make this mistake all the time and they say, well, I want to get the whole position. I want to capture the whole move because that's what I need to do. How do you capture the whole move? That's gambling. Okay. Don't try to capture the whole move. Take bits and pieces off as this thing goes. Also, gauge your profit targets by your risk. So look at everything in terms of risk. So are you at, 1-to-1? Are you at 2-to-1? Are you at 3-to-1? Those are good places to take money off the table. Okay. In this environment, I'm at 1-to-1. Anything at 1-to-1, I'm taking money off. All right, because things change so quick and things get so dramatic. You give back the profits fast. So 1-to-1, I'm out. All right. So all right, you guys. So I hope that helps. I got to wrap this up. All right. So, hey, everyone, I want to thank you all. Let me just see what else I got here. Man, these questions, there's just millions of them. Where is a good day trade for Bitcoin? David asked. David, from Miami, Bitcoin 40K, 30K. So day trades, I can't really tell you from this time frame. You'd have to look at smaller day trades develop on smaller time frames. But as far as general levels go, I mean, we're at a level. 40K is a level, right? So that could be 40K could mean 40K, 39K, 38K, that area, right? That range. It's just the price action that develops in that area is going to determine the setup and all that kind of stuff and your expectations. But that's all I could say about that right now. All right, you guys. Yeah, so again, I'm going to stop now. I appreciate all your great questions. Again, if I missed your question, I apologize. Please join me next Monday. I'll be here on TradingView and on YouTube and all that other stuff, and I'll be answering questions again. Try to come in early and get your questions in early. See, the clever people here, they put their questions in early before I even begin, so I have all their questions to read. So that's the way to do it. All right, you guys. So I want to thank you all for taking some time with me here today. I hope you got something out of my stream. It's very important for me that you get some sort of educational value, whether it's, hey, you learned about a level, you learned about something. Okay, that's why I do this. So wherever you're in the world, enjoy the rest of your day, the rest of your evening, and thank you very much for watching.